Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So firstly, just a quick recap of last week. So of course we had the European Central Bank announcement on Thursday. This played out very nicely for us last week. We were able to bank 530 points across the metals, including gold, silver and platinum. Each one lot traded at 530 points. This is $5,300 profit. Each 10 lots traded is $53,000 of profit. Not only that, but we still continue to hold our Palladium position as well. Two trades on that which are up over 3,000 points at the moment. Each one lot traded, that's $30,000 of profit. Each 10 lots traded, that's over $300,000 of profit. So it's been a very lucrative week again for the precious metals here. We did see an initial breakout on the European Central Bank announcement with the metals. As we discussed last week, what you wanted to continue to look out for was buying evidence just above $1,900 per ounce for gold, and also buying evidence around that $26 per ounce handle for silver. We discussed both of those with you last week on gold and silver asset of the day. As you would have noted, those levels did hold, and especially on a closing basis where they continue to get bid at that zone. So in fact, many of you have been able to sniper in and get really tight entries near 1900s last week for gold and near $26 per ounce for silver, which worked out perfectly for us as well, reloading on positions, and we've been able to benefit of that breakout of the European Central Bank announcement, locking in profits during that news item, and then essentially we're looking for more opportunities next week to reload and add additional positions as we lead into the FOMC statement, which will be next Wednesday. So that will be a major driver, which we'll discuss shortly as we move over to the charts. Now, each quarter, several major themes have shaped the financial landscape to present really big trading opportunities. And of course, this year has been no exception to that. During the first three quarters of 2020, precious metals, they outperformed every other asset class to hit fresh all-time record highs. So whilst there's no doubt that the long-term bull market for precious metals remains very much intact, in the near term there's going to be several high impact news events where you're going to see volatility which could change the short-term direction of prices. So between now and the end of the year, this is going to present a great window of opportunity where you can benefit from all of the volatility that we're going to get, especially in the lead up to the US elections as well. We've got three presidential debates in the lead up to that. We have, of course, another FOMC statement next week. We'll have another minutes of the FOMC as we go into the month of October, and then of course we've got another FOMC statement, in fact just one day after the US election in November as well. Now, the first presidential debate between President Trump and Joe Biden, that will generate huge price volatility. That's going to generate some big price swings. That will be at the end of September. Then we also have Tesla's much anticipated Battery Day event. That will be on Tuesday the 22nd of September, where Elon Musk will unveil details about the next generation million-mile battery cell for Tesla's vehicles powered by Palladium. And as you know, we've continued to benefit of these rallies with Palladium. We currently have two positions which are up over 3,000 points at the moment. That will be a major event and follows on from Tesla's last groundbreaking event in 2015, where Palladium prices, they surged over 435% over a 3-year period. Last year, prices for Palladium, they doubled from the period of September through to March. So you absolutely need to keep an eye on that metal. And of course, we have the US presidential election, which is going to dominate headlines and drive market sentiment over the next 90 days. These can provide unique and very fast wealth generating trade opportunities where you can build substantial growth into your trading account very fast via these major news items. In fact, Goldman Sachs has already begun preparing their clients for what they predict could be one of the most profitable quarters ever seen. So if you've been kicking yourself that you potentially missed out on some of the major trading events that we've had so far in 2020, where you've seen gold prices break out to all-time highs, you've missed the boat on many of the metals like silver going up 50% in the latest quarter, but you still want to make 2020 your best year yet, then you can still be well positioned to capitalize on these big trading opportunities that we have over the next 3.5 months. We expect higher than usual volatility over the next quarter as we enter a very exciting, lucrative, event-driven period. And we've said it before, before, during these extraordinary times, they create extraordinary opportunities, and we're living in unprecedented times at the moment. In fact, in these fast-moving markets, data is power. If you get too complacent in these markets, you will get crushed. These market conditions will not benefit just buying and holding. You need to be very nimble. You need to make sure that you're aware of the key levels of liquidity, where to bank your profits before you get the big sell-offs, where to then reload, where many traders start to panic sell out of their positions at the low points. This is often where you need to be buying. When traders are getting stopped out, you want to be getting filled into your long positions like we are, where we capitalize on these areas where market makers, the algos, are targeting to take retail traders out of their trade. If you're aware of those levels, the key areas of liquidity, then you can position yourself correctly to capitalize on that. If you want to thrive in these fast-moving market conditions, you need to be nimble, adaptable, utilize a research-driven approach to ensure that you're getting the ultimate edge to capitalize on big moves, no matter if the market is going up, down, or sideways. In fact, range-bound markets can be extremely profitable as well. It's the accuracy and precision of knowing where to get in and where to get out. And this is where technical analysis and outdated technical indicators will not work. Those days are long gone now. If that's all you're relying on to get an edge in the markets, you'll end up FOMOing in, getting the wrong entries, getting caught out on bull traps, and then selling at the lows, missing out on a lot of opportunities, and essentially getting chopped up a lot in the markets. You won't be able to keep hold of all of the gains that you may have made in previous months because of the volatility. In these fast-paced, event-driven markets, this is where data and market intelligence is power. The greater the data and intelligence you have access to, the greater that your edge will be. You need to know what the hedge funds and banks are doing in terms of their positions in the markets, where they're buying, where they're selling in real time, so you can get your timing precise. Key liquidity zones, fundamentals, proprietary macro intelligence, seasonal cycles, the intermarket correlations. You need to have access to that data, which is not available to the average retail trader. As we head into the final quarter of the year, this is where you're going to continue to get these lucrative event-driven markets, which is absolutely perfect for trading. So if you want to successfully navigate that volatility, capitalize on the huge opportunities ahead, build substantial life-changing wealth, then you need to be utilizing a professional research-driven approach to the markets. So with that, let's move over to the charts, and we'll talk you through exactly what we're looking at here as we go into a new week. First of all, moving over to gold. Hedge funds and money managers, they have increased their overall net long positions again in the latest week, and we continue to see that buying coming in above the 1900 zone. In fact, since we capitulated back at the beginning of August, even with the sell-off that we got down to 1,860 US dollars per ounce, we have not closed there below 1,900 US dollars. So even though we're getting retests of that level, gold continues to hold. And of course, if you take it out to the higher timeframes, this is where, in fact, you've now got the previous all-time highs here are providing support now. So where we broke finally above 1,900 US dollars per ounce, this is now providing the support on the much higher timeframes. It's the same with silver as well. Silver's got a very sticky level at the moment at 26 US dollars per ounce. So we continue to see that previous level of major resistance back in 2011 now provide support in 2020. So above the 1900 level at the moment on a closing basis is where gold needs to hold at the moment to provide opportunities to keep getting in nice and tight with a good risk reward, and very simply trade the ranges at the moment. We've seen over the last 3 weeks here the usual pressure to the downside that we get at the beginning of the week, particularly into the European and the London session, where gold tends to be under pressure. It fakes out a lot of traders, particularly retail traders who are taught a break of a trend channel would then lead them to then panic sell out of the potential long position that they might be in at the start of the week there, for example, with gold last week. And also many traders then start to sell short. They see the breakdown of a trend channel. They then look to go short only to then see a bear trap, and they get taken out of their sell short, and they were also taken out of their long position as well by panic selling out of this pullback that we got at the beginning of the week. And this is what we're seeing a lot of at the moment, is this up and down price action that we're seeing with gold is causing many traders with weak hands to get out of their position and even sell short and go the opposite direction, where they're getting taken out of their sell short shorts because they cannot withstand 500, 600, 700 point moves against their position. And we're seeing this a lot since we saw that breakdown at the beginning of August. So what we're looking at now as we go into a new week is that the FOMC statement is, of course, going to be on Wednesday. I would look again to see if we will get another opportunity, another retest back towards the 1900 level over this week. And this will be similar with silver as well. I want to see if we can get another retest back towards 26 US dollars per ounce. Now, bear in mind, we've got positions on the metals from lower prices as we go into next week. So we do have trades on here which are protected. We banked a load of profit on the breakouts. As I mentioned, over 500 points on the breakout on the European Central Bank announcement, and we're managing these trades going into next week. But I would still look at opportunities to reload if we were to get further pullback. So if you have a look at silver here, for example, and you just put that 26 US dollar per ounce level on your chart, you will see where it was a major level of support going back to 2011. In fact, pinpoint, we saw reversals at 26 US dollars per ounce over 2011, where we retested that zone not once, not twice, but over 3 times. We tested that zone, found very strong support, and now 9 years later in 2020, the 26 level again is providing a very key level here where many traders are buying in at this zone. We're not seeing a close below $26 per ounce. So again, if we were to retest that level going into next week, I would look out for buying evidence. If we were to break and close below it, yes, then we start to look at different factors here. I would then have a look at the gold silver ratio, see if it has broken above 73-1. If the ratio starts breaking out and starts to move towards 75-1, this would favor gold to perform better over silver. In order for silver and gold to do well and continue to follow through, ideally you want the ratio to break lower, and you want to break down back below 70-1 for the gold silver ratio. That would favor gold and silver prices going higher. I suspect going into next week we'll see more range bound price action, particularly around the FOMC statement as well. But as long as we hold, again, above $26 per ounce for silver and above 1,900 US dollars per ounce for gold, there are some great opportunities to get in tight at those levels. And again, remember, normally we do get some counterflow at the beginning of a week, and particularly during the London and European session. And it's not until later on in the day, especially into the later part of the US session and then into the Asia Pacific session, where typically the metals are at their strongest. That's where you start to see the rallies. That's often where they'll be at the high point of the day. So if you take advantage of those cycles, you can do very well. And as I mentioned, Palladium at the moment, this has been a great performing market for us, certainly over August and September. We're currently up over 3,000 points with 2 trades running. Again, even if you're only in at 1 lot, that's over 30,000 US dollars of profit. If you're in at 10 lots, that's $300,000 profit on just these trades that we've got running right now on Palladium. And of course, we're going to be gearing up now for the 22nd of September for the Tesla conference, which could be a major driver here for Palladium. But as we mentioned previously, where we've talked about this with you on the week ahead commodity reports over August and also at the beginning of September, there were some great opportunities to get in nice and tight here around 2,150. You can see the price now is 2,310. I'm essentially looking for more upside on this market. I do view dips as buying opportunities, but I'm looking for a retest back towards the swing highs here and then taking us back towards the 2,400 to 2,500 level. But I'm going to keep a core position on here for more upside, certainly as we go into the Tesla conference later on into September as well. And I would still consider pullbacks. They've only been shallow in the latest week on Palladium here as buy opportunities. And then finally, if we move over to platinum, platinum has been a great market for us as well. So around that 900 US dollar per ounce handle, we've seen a lot of support in the latest week. The platinum to gold ratio has also demonstrated that relative to gold prices, platinum is the cheapest it has ever been here in history. And with that, there will be a reversion to the mean. So for those of you that may have traded platinum back in 2010, 2011, platinum was more expensive than gold. And at the moment, platinum prices are trading at less than 50% of the price of gold. We've got platinum trading right now at $932 per ounce. Gold is trading at 1,939 US dollars per ounce. So we're going to get in time a reversion to the mean where platinum prices need to catch up to that of gold. And we've certainly seen that in the latest week where platinum prices have been leading. We've got a position on at the moment with platinum, which is up over 270 points. Platinum prices for the week were up 3.3%, and they've led the metals to the upside here. And I like the overall price structure that we've seen in the latest week. Again, I would look at, if we were to get another retest back towards major level of support here, I would look at buying evidence around the 900 level for platinum. The caveat to that is normally platinum prices, they do pull back at the end of September. So we are being nimble here. We've protected the trade here. We've capitalized on a decent breakout in the latest week. Just be mindful, platinum prices, they may consolidate to further upside next week, but normally they're vulnerable at the end of September. But I would look at that sell-off as an opportunity then to reload as we go into October if we do see that normal vulnerability at the end of September for platinum. But it's been another great market for us alongside palladium, alongside gold, and alongside silver. And again, if you would like to join a community of successful traders where you can just ditch the 100% technical analysis approach using outdated indicators which just don't work, you need to be getting an edge in the market where you're utilizing data, market intelligence, that you're aware of what the hedge funds and money managers are doing week to week here, which will help you massively, just having that awareness of not only the hedge funds but also the banks, the institutions, how they are positioning themselves in the market, being able to react fast, be nimble in the markets and taking your profit off the table, being aware of the key liquidity zones, the intermarket correlations. This will help you massively. So if you would like to learn a research-driven approach to the markets, join our community of successful traders. There is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You get access to our real-time trade alerts, trading research and market insights, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.